Hello guys, glad to have you on board again for this 2019 year ahead. I hope you had some nice holidays. I did, and I'm now back to work, and first of all, we've got a lot to talk about. We're supposed to make some intraday trades normally on those Thursdays, but we obviously won't do that because since the last time we kind of talked together, a lot have been moving, and especially in the Forex markets within the latest 24 hours. But we're going to talk about that right after the cryptocurrencies, because I assume that some of you still don't care about other markets and just want to have crypto only. So I'll do as you please and have a look at our classics, Ethereums and Bitcoins. But to be honest, not a lot have been changing recently. I still think we're consolidating some way in the Ethereum, and I would say the 4-hour chart time frame seems to be the most reliable one to kind of price in the latest informations we had on that market. So basically what I have in here, if I'm trying to assess, we've been rebounding down to the bearish context, but still holding on to the bullish trend channel. Which means the bulls are in control in short term, but they're facing some strong bearish resistance. But I still tend to believe that the bulls will win that battle, in the end. So I will still remain in the bull side for now and until further notice. All I think is that we're building a range, holding support, failing resistance, holding support, but probably at higher level, and we'll see how it goes. I thought we were building a triangle in here with an ABC, and I said I was waiting for a potential DE structure to buy. The market invalidated that option, and we're apparently still choosing, still opting for a triangle, but with a different shape. So I'll probably say ABC in here, ABC in there. So we'll probably found the origin point, A, first corrective wave, B, second corrective wave. So if we're heading triangle, which the underlying structure may suggest, then we'll still have C, D, E waves to go, so still a lot more consolidation to pull through. So it's hard to give up timings within ranges. It's even harder to assess what the range will be, because that structure of ABC can very well put us to a flat range, which is ABC flat consolidation. So let's say, what I can say, at that point, I don't know anything. I'll just wait to see how deep this can retrace. We have no selling signal. We're just reversing out of a stop area, which means we're going in here and we're failing to trigger the stop losses, which means we're not trending yet. And until we remain in below those prices, I would suggest we just patiently let it go and let the range build itself to go mature. All I'm searching for is to figure out what the slope of that trend channel will look like. So we're probably going to need to range for further, to range a little bit further in here, a little bit longer. So let it go, wait. Everything suggests that range is going to be extracted by the bull side and probably going to trigger a wave 3 kind of trades. But so far, it's just impossible to make this work. So waiting for the range to build up, trading the breakdown or the maturity of those ranges will be the option I'm opting for right now, which means waiting is the only option. There is no room for trading in ranges, so all I can suggest is that this is bullish range. So you try to catch up the interesting prices of that range, which means to me the interesting prices in here. If we go there, I'm interested to buy on an ABC flat structure, but anything in between or anything different to that is just not interesting to me. All right, so that's for cryptocurrencies. I'm taking Ethereum right now instead of Bitcoin to analyze, because I think this is where the game is at play right now. I think Bitcoin is just holding crypto value, but what is expected to trend harder is definitely Ethereum to me. All the prices, structures, really suggesting this. This is where we've got strength. This is where we've got demand on the Ethereum. So I pretty much like to analyze this thing instead of Bitcoin, even though Bitcoin still remains #1. No problem with that. And I stand on the thing that you shouldn't be just buying Ethereum or just Bitcoin. You should really buy like a bulk of a batch of cryptocurrencies. You need to be spreading the risk throughout the major cryptocurrencies. Stay in the top 5, I would say top 5, top 10, no more than that, but it gives you plenty of options. If you've got some preferences, you can take that in consideration as well. I don't have any. I don't take care of fundamentals, so all I can take care of is price structure, suggesting me that at the current stage, in the current time of those early ranges, still suggest people are more interested in Ethereum's right now for speculative purposes, I guess. But I see more demand in Ethereum's than other cryptocurrencies. Slightly more. It's gathering all attention and the others just don't give a shit about. It's really like, I think Ethereum is definitely one of the vectors you should use to get in there, and then not the only one, all right? But the one that you need to have. Okay, you pick some cryptocurrencies upon your own choices for your own reasons, but I would say Ethereum should be one of them, and definitely Bitcoin as well for price holding value and market cap. All right, that set aside, what we have to talk about is really the Forex market has been moving erratically the latest 24 hours, let's say the latest 48 hours, because basically since we started in 2018, 19, sorry, it really got crazy volatile, and we've been breaking through major levels just by the latest 24 or the latest 48 hours. So let's take us, for example, all the yen pairs. So you may have noticed the color code I'm using. So blue for buy for things I have bullish in the portfolio, and red those I have bearish. All the yen pairs basically disappeared. USD3 as well has got to be triggered profit taking, and so all those yen pairs are gone up. Okay, NZD yen profit taken, CAD yen profit taken, EURJPY profit taken, all by limit trades, which means it's been done. I didn't even notice it when it happened. I just noticed it afterwards because I had limits on profit taking areas, and basically they got filled. So so I'm out. I have no longer bearish trades on NZD yen. I was targeting that price area. We got there pretty brutally, but we've got there anyway, and I got executed, which is all I care about, which means right now profit is taken, and it's a hell of a profit. I have to say that, really, 2019, and it's not to brag myself, but to be really honest, it's the best trading day I've ever had in my entire trading history. I'm talking about a day-to-day basis move on the account. It's even better than what happened last year in February when the US indices get to fall apart, because they basically build this trade day by day to get to the day to finish the trades. But on that day, I didn't get to make 15%, which I did just yesterday. I mean, basically, I remember what the account was pricing in at in the morning, and basically when I figured out the yen pairs were out and that the account was has been moving sharply to the upside, I just figured out I made 15% a day, and that's enormous. That's the biggest trade I've ever done. So thanks to the BOG, obviously it was highly, it wasn't expected, let's say that, okay? It really wasn't expected. I expected the price to go there, but definitely not like that. So we've gone there, not with the expected way, but we've gone to those areas, which means profit taking is absolutely necessary. It's not because we're heading there with violence and brutality that you need to extend your targets. Those targets were long-term targets, so even if we're reaching out to them like that, which is unexpected obviously, doesn't mean you have to review your targets. Targets have been hit, you get the fuck out, you take the nice gains and enjoy them. Money is definitely much better when it's no longer growth profit, but profits right on the account, which is the case right now for all the yen pairs. I still keep a USD JPY, but I took 75% on this one because I still think we can have some tiny potential on the dollar as well on this one. I think we can just try to fuck up the monthly support, but just have a look at that. I mean, god damn it. This is incredible. What's been happening in there. USD GPY basically it's been falling apart for 3.5%. We rarely see this. Really rarely. It happens, okay? It's not, but it's kind of a flash crash kind of scenario. Low volatility, high volatility, low liquidity, and breaking through major levels, just like that, like it was nothing. So all those pairs been reduced. Obviously, it isn't just perfect. Some things have been going wrong, like euro dollar. Okay, it's not just black and white. It's always shaded grays in here. And the thing is that I had to reduce the leverage on euro dollar. It's been done at the break-even point, so at the entry point it's slightly above. So it's been a gain, but not a big gain, to be really honest in there. The thing is that I've been clear with that. I've been buying those breakups, these ones to be precise. So I've been going leveraged into euro dollar. So I had kind of some heat in here, but I decided to remain in. The market decided to go higher, and I was there. Okay, now it's good. We can be confident in the fact that euro dollar wants to go bullish, and then this happens yesterday. So pretty brutal first day of the year to come at the reopen on the 2nd of January. The market is brutally rejecting, but this time we've been testing the bullish, the bearish trend line. So the thing is that this is good. This isn't good. Absolutely isn't good. I don't think this is something to be really 100% worried about, because that was kind of expected for the market to kind of react in that area. So as long as we remain above the major support, I would say, okay, it's no big deal, but it's just the market isn't ready the market isn't ready for some bullishness. But I would definitely think that, I don't know how this will close, and I don't know if we've got far enough to consider this trend channel to be reversing at the next change, which is going to happen at the end of that week. So we'll see about that, if next week is reversing the trend channel to the bull side or not. If we're not, then there are some risks for us to get back in here and break the major yearly support. And if we do that, then obviously I want to be speculative leverage in that kind of trade, to accept the fact that the market could try to go lower. So I was leveraged, and that wasn't acceptable. So I removed the leverage, I removed the reinforcements I made, and I just go back to speculative leverage until further notice. Same thing has happened on the GBP/USD, but this one has been gotten out with losses because I took the profit. I locked on the gains in here, which was losses, because I remind you that I got an average price. Sorry, I had to update this. I think my average price is nearly here right now, but same thing. No, sorry. So it was here previously, and I got in here leverage, so it should be halfway through. So probably I'll get an average price near this, to be confirmed, but I can definitely say it's probably near that area, because this was my speculative leverage, and I got to double that leverage right on the same candle at the euro dollar when I got leveraged into GBP/USD as well. Same thing goes in here. We try to break through. We do this, and then bam, brutal bearish reversal in here. And there we've managed to break through support, because this is a really weak pair, and on that freaking volatility, overnight volatility, we kind of have managed to break through support. So lucky me, I had no stop losses, and I have reduced the leverage earlier, but this isn't good. This isn't looking good, and we'll see how it goes. It wasn't expected. We shouldn't have gone there. If the market was bullish, we should have held on to that support. So we've been going below without candle closures for the moment. So as this has been happening on everywhere in the Forex market, we had some side effects from what the BOG has been doing, even though there is necessarily no link in GBP dollar with the yen, but somehow some pairs have been pricing that in because of high volatility, low liquid market during the overnight session. And facing this, I would say I don't know. So most of the Forex scenarios have been hitting major profit taking and bringing some huge gains. Some of them are not performing well, at least not according to the expected scenario. I have to review. Okay, it's a step back. It's not going out. Well, what I mean in here is that EUR dollar, GBP dollar is basically, I just got back to speculative because I see uncertainty back in the market and I don't want to be leveraged in an uncertain market. Leverage is only what happens when the trend is triggering. Apparently, the timing isn't there. The timing isn't right. We might need to range a little bit longer or whatever, or we're still bearish. I don't know. But the thing is that facing that bullishly leveraged isn't an option. So I took the profits off the table on the euro dollar. Really, it was like nothing. I basically earned $50 or something like that, which is a negative profit taking, or call that loss taking on GBP USD to lower the leverage. Okay. It's no big deal, but that's how it is. So I basically got out in here yesterday, and that's how it is. Or maybe a little bit higher than that, but it was near that price area. It made the bearish engulfing, so I had to get the fuck out. So waiting for further information, GBP USD may be ranging in here for a bit before reactivating bullish, but for now apparently the market isn't yet ready to trigger some trades. Same thing goes in here. We still have the same trend line at play. As long as we remain below there, below those prices, there's nothing you should really consider to be bullish. So we need to break through this and we need to accelerate. So far we don't, so we wait and you get to remain speculative leveraged until further notice. Gold and silver is reaching profit taking area. We're clearly going to see this in a daily chart. We got a triple bearish signal in the context, so I strongly suggest that this is about time to profit take, lock on the gains on gold if the candle closes like that, because we still have to close the candle, and if we close it at the high, obviously it's not going to signal overbought. So we're going to wait for this, but if it closes like that, we're trading Fibonacci retracement in the context with a bearish signal. Obviously, it means you have to lock on the gains. This is purely and simply applying the strategy here, and I strongly suggest you do so if you are trading gold. Doesn't mean you have to get the fuck out, obviously not. Just means you need to profit take, lock on gains, say 50% is a minimum out there. Same thing goes to silver. Trading interesting price area, Fibonacci, range, target. We have no signal in here to confirm, but I very well suggest you do the same. If you take 50% off the table on gold, do it as well on the silver. These two guys are playing the same game. Okay, so it's just securing the trades, because if we do have some retracement, then we'll have free cash available to buy them. And if it keeps on going up, then we'll still have 50% in, which means you don't have to run after prices, and that's the best case scenario. You can still put that money back in the market 2 days from now. If we break through those levels, and if the market doesn't give a shit, then you just let it go. You still have some money in the market. But I would suggest, just like this, as we see that we have strong volatility at the beginning of that year, I suggest gold could be under pressure as well in the next few days. I don't know why, I don't know what could cause that, I don't give a shit. All I care is that right now you really need to put a limit profit taken in here. So if the price is reaching out to, let's say, yes, 1315, if we go in here, I suggest you really put some limit trades in here to lock on the gains, just like I done with the GPYs pairs. I suggest in here is a maximum profit taking. So if we go there, you lock on your gains and get the fuck out, and you'll buy again on supports. But if we go there, I think there's no more bullishness to expect. At least the risk will be so crazy that remaining bullish in there will be too risky, simply too risky. Too much risk for fewer gains to expect. So I would say in here you just get the fuck out, wait for retracement or pullbacks, and you're probably gonna be able to get back in that market later, probably with better prices. So I think that's a rational operation to make. All right, that's basically it. We have the BUNDs reversing as well. So we've been going in here, triggering a stop hunting pattern. So we've gone in here, we've been triggering stop losses, and the market is reversing. so no problem with that. I'm still trading with a March expiration in there, and I still tend to believe that until March we'll manage to go bearish until then. So I'll just remain patiently waiting in there. I'm not reinforcing because I need the market to validate. So still patiently waiting for the BUNDs to trigger and confirm the trade. I sell bullish on the on the DAX, even though it's not pricing in very well today. Let's have a look at that. I would say, God damn it, come on. All right, so we're still trading very low, but we're still trading above previous day's high, previous day's low. So I would suggest we're probably going to make another low shadow candle today, and then in the next few days I expect us to go some bullish. But for now we're still kind of building leading diagonal structure. We can clearly see that in a 1 hour chart time frame. You can see 1, 2, 3, 4, 5 structure at play. Wave 4 literally entering into wave 1 territory. So either this will fall apart and we're gonna get new lows, and this would just be an ABC flat correction, or I suggest we build a wave 5. It's gonna be a leading diagonal structure. All right. So 1, 2, 3, 4, 5 into a bigger 1, 2, 3, 4, 5 to come. So probably something like that. 1, 2, 3, because we're going to have extended wave after a leading diagonal. So I would suggest this is probably what we could have. All right. So extended wave in here to come, wave 4, and then probably wave 5 to come, and then in here we stop. If we go in here, you're probably going to lock on the gains. We're kind of trending into the German DAX. We're clearly a bearish market right now. It's been clear about that. I mean, that's how it is. All right. Regarding shares, I no longer have Apple, but Apple has been profit warning. So I mean, just remind you guys, just a few weeks from now, everybody was just crazy bullish about Apple. Everything was so bright, everything was great, everything was perfect. We have to buy that shit to hit whatever God knows stupid targets the analysts were targeting. Now we have fucking profit warning on Apple, and you think it's normal that let's say 2 months from now, everybody was just bullish, and now we have profit warning. It was expectable some way. It's just that the analysts have been doing some very poor job out there assessing what Apple had ahead. They were crazy too much bullish, and they've been bringing in a lot of retail traders who've got trapped at the market top. So it doesn't necessarily suggest that Apple is going to fall apart again. We're making minus 7% right now, early trade from what I can see. So we're back in support area. I would say at some point Apple is going to be a buy, but you obviously don't buy when you get a profit warning. So I would suggest you patiently wait for this to show up as an exhaustion gap, so the final gap on a trend, and I suggest you wait for the gap, you wait for the filling of that gap, and if the gap is filled, then we know that we can buy that 148 support, and if we do that, we're probably going to buy Apple this time. Kind of trendy, so I'll buy with far less contracts than the ones I've been selling on top. So I would say just buying in here for pure retracement. Building probably is going to be a triangle because we're going to have so much selling demand in those resistances that I don't see us going higher than that. So I'll probably suggest 50% retracement or even 38% Fibonacci is the maximum level we will target, but it still lead us with a $175 per share. So it means that we can get some decent rewards on Apple, low risk, but definitely tiny amounts to play there. I still remain bullish on Facebook, Nvidia, and Electronic Arts. Those three are performing pretty well. I'm playing retracement games on those ones as well. I still have GE, who's performing well, and I've been reinforcing GE. I'm now speculative trading again in there. We'll see how it goes, but I strongly suggest that we're going to go higher than that. We probably made wave 1, 2, and wave 3 to go in here. I hope this is the case. So we should have trending in here and breaking resistances. So I would suggest latest resistances in here. So I would probably significantly think that we're going to break the $9 resistance to go set ourselves below 10. So I would say the next area to get to trade and to lie down to is probably in here. So we're going to have bearish demand in there. All right, see that from the volume profile. Next breakout area is in here. Previous one will be there, and we're going to probably go sideways in there. So I would suggest this as a range area, no bearish. I would just say that we're going to go sideways in here, executing the bearish demand, but still having bulls in control. So probably going to go ranging in here, flat ranging, and probably going to expect bullish outbursts out of that. So for now, I still say, okay, General Electric is confirming the trading scenario. I cannot go leverage in here because it's a buy and hold, but I've been piling up with some speculative interest on top of that to target that area. So I took speculative trades near there when we made a daily bullish engulfing, heading into those areas to trade. That's it. What else could I tell you about? Basically, that's it. Most of the account right now is off the table. I'm still trading the dollar index. I know it's been pricing crazy, all right, let's face it. So the dollar index is attempting some way kind of a reversal in here, but I don't think it is the case. We've got we've got no signal because the divergence has been playing in here. So as you can see, it's priced okay, but we've got absolutely no confirmation in here. So I would suggest this is just a technical rebound, probably one of the last. So I would say rating in here to see that thing playing in the game, but I'm still remaining bearish on the dollar. I just think that this is brutal reversal because we have volatility and the dollar's been playing a safe haven demand, but not that big of a deal. We're clearly not breaking any resistance in here, so just a technical pullback to me. But I still strongly suggest that we're going to have more bearishness and that we're going to fuck up this bullish trend line. We can clearly see the algorithm has been highlighting that area to be trending like, and we clearly see that the market is trying to price in that trend line. So fuck it, that's not what I want. I'd like that. All right, so we're trying to make to build a trend line in here. So whenever we'll break this one is where I go leverage, fully leverage on the dollar. So for now, I'm still leverage. Okay, I'm maximum speculative leverage on the dollar. Still not into leverage because I think the dollar still has a lot to play throughout the next few weeks, throughout euro dollar and GBP dollar mostly. All right, that's it for today. So we'll see about that. We'll see how it plays out till tomorrow. I pretty much expect the equity market to kind of holding on to those supports, at least try to hold on. And if they do, then we're probably going to have some technical rebounds. Profit taking has been reached out to in the SPX. So I remind you that the goal in here was to target 23.6% retracement. So it was basically buying in here, profit taking in there. Perfectly executed. For now, I think we go sideways. I don't expect deep retracement. All I expect is for us to remain in there. I'm probably going to have another consolidation wave, probably heading toward that resistance in here as we generally make overlap. So I suggest we can have wave 4 probably in here, or I don't know, but I don't expect that big of a retracement in the US. I expect more retracement in the euro area, even though for now the market is tends to prove me wrong, as we have a more bearish euro area than the US area. But I still expect that this will change some way, and this is what could shift the euro dollar in my favor within the next few weeks and months. So I expect we've got a lot more retracement to make in here, as for example, the DAX could be retracing 8 to 9%. Where I think the SPX barely have 5% to retrace. All right, so this may cause a 4 or 5% move on the euro dollar, getting us out of the ranges and give some sentiment of trending that I want to take profit out of. So this is the only this is the last scenarios I still have right now, and there's another one that we're gonna have to talk about, and we're gonna finish on that, which is AUDNZD. This one really is concerning because this is not enough. This is quite an odd situation we're facing right now in the AUDNZD. We're rarely seeing something like that. I mean, the last time we had something in here was like that, but we had catalysts. We had absolutely no catalyst during that night. It's just the market has been acting irrationally, and the low liquidity factor has been playing real hard on the Australian dollar and not on the New Zealand dollar. So you can clearly see the difference in here. You look at the AUD and AUD USD, how it's been impacting throughout the day, throughout the night. Crazy lower shadow candle, but it's really short-term move. Just have a look at that in an intraday basis. Basically, flash crashing and recovering. So this is clearly V-shaping structure. So I would say we're done with AUDNZD. But the thing is that in here we've been reaching out to very, very long-term levels. We've been breaking through this 2016 lows. It was possible. It was expectable somehow. But normally we should have had the same thing on the AUDNZD, which means NZD should have priced below at least that low. Not even searching for this, but it means NZD now has a lot of bearish potential to come up with, because AUD has been doing it, NZD will do as well, which means NZD will probably get itself in here, and that's pretty fucking far from current prices. It means 9% drop to expect on NZD in the next few weeks and months, where the AUD has been doing this already. So AUD has been suffering, NZD may be about to suffer, so I think AUDNZD is going to be bullish, simple as that. So it's a cross. It's been really suffering hard yesterday, and to be honest, I'd never put stop losses on the AUDNZD cross, because I know how volatile this shit can be. And there are some stop hunting things. It's an exotic pair, so you don't put stop loss close to the market prices. And obviously everybody who's been putting a stop loss has been taken down last night. The thing is that I've been taking a high level of risk. To be really honest, not placing a stop loss, if I managed to wake myself up this morning with AUDNZD pricing in here, you know I'm leverage 3 in there, which means if we were going down in here, I would have suffered an 8% loss, net loss. Obviously, on top of the more than 15% I took on the yen, would still have been a great night, but it will really have way more shaded grays than what is currently at 2. Because, yes, the AUDNZD has been breaking through levels, but it's been doing this in a crashing structure, which means I don't give a shit. It has no value to me. We've gone there where the prices are rejected for now. And as long as they do, I still tend to believe the AUD has been going there. NZD has to do it as well, which means bullish AUDNZD down the road to me. But we've been breaking through year lows, which means we've been breaking 2017 year lows. If we have a look at this in a yearly perspective, this is really, really ugly. All right, so what we've been doing in here isn't good. We shouldn't have done that. Obviously shouldn't. The thing is that when you have that kind of context, 4 years contracting prices, the 5th year, as I said, is going to be trending, which means I was expecting us to hold the previous year lows and heading into the previous year's highs to fuck them up. We've been fucking the lows, but I think we're going to fuck up the highs as well. So I still tend to believe that AUDNZD scenario is going to come. It's just that, yes, what's been happening throughout the night is a shame if you have put it stop loss and got taken down. But I can't tell you guys not to put stop losses. So if you've been caught up in that shit, you're probably going to be pissed off. Really, you're going to be. And I can very well understand that. Then all I can tell is that you took a lesson. You took a trading loss, and a very important trading lesson. Sometimes, and on some pairs and for some conditions, putting stop loss is going to put you in danger. This is what I know on AUDNZD, but this is what you just learned the hard way. Yes, I may understand that, but believe me, you're going to have losses like that in the future as well. They always happen. Even when you're going to be mature in trading, they still happen. I still get trapped into some nasty things, but throughout the time, you're getting better, so you're assessing those dangerous situations. And I know AUDNZD was dangerous, so I didn't put stop losses for that reason. I took high level of risk, and I'm really consistent with that. You know why I'm doing this? Simply because I have some previous gains to invest in here, which means I could have just lost them all in a single night if for some reasons the flash crash will have pulled through. If we installed value at the prices we've gone down to, I would be fucked. I'm not. So yes, I've been taking risks, but this is what trading is about. You're taking risks, but you need to take manageable risks, not too much risk, because otherwise you're going to end up broken, but you still have to trade risk. Trading is about risk management. For a gain, you need to risk something, and sometimes it's going to work out, sometimes it's not going to work out, but you need to make sure you're not taking too many risks, too much risks. So, to finish with that, if you got caught up in there, I hope you didn't take it quite a loss. Normally, you shouldn't be doing that. You shouldn't have got fully leveraged. You know about that. I was leveraged, and you know why I was, because I was reinvesting previous gains, which means if you had no previous gains, you should never have got yourself into a leverage trading in here. And anyway, if you took a loss, I would suggest this is the kind of loss that the beginners in trading cannot get out of. You have to take those losses because you just can't afford not to use stop loss when you're beginning at trading. So this is the kind of situations in which the market will just fuck you up and you have nothing to deal with. You just have to let it go. All right. So take that loss, even if it's painful. I hope it's not too much painful for your account, and just learn the lesson. All right. You know AUDNZD is a fucking volatile pair, so manage the risk, not to take too much risk, but to avoid using stop losses and assets like that. It's just like it is on Bitcoin. All right, we knew we had bearish risks on AUDNZD, even though I think the long run heads toward bullishness. So you have to assess that short-term bearish risk. Same thing goes for the Bitcoins. But I have more confidence in this one to tell you that you need to be buy and holding, all right? Which means you buy the Bitcoins and you just hold and don't care, don't put stop losses. But I couldn't tell you to do the same on AUDNZD because buy and hold with leverage is not an option, all right? But it's kind of the same thing to me. It's a buy and hold. I'm not putting any stop losses on AUDNZD for that reason. All right, so obviously through time, when I'm making those shows, I'm just not cutting the technicals in here. I could do that. I could stick to simple things and educational purposes things. I don't want to do that. I don't want to ease things for you. I'm really playing this the way a professional is playing that. And obviously, as I teach to you guys every day, trading is not black and white. It's really shaded grays, and you're going to get better at assessing those shades through time as you're going to get better at trading. And obviously, I know that the beginners cannot see the shaded grays in AUDNZD so far, so they had to put stop losses. With some experience, you learn how to manage the risk, because no stop loss means you need to be aware that if it goes wrong, you'll have to get out without overthinking. I know where I'm going to get out on the AUDNZD. I know I had to get the fuck out if we broke through those supports. We did, but did we hold up a candle close? No, we don't. So it's not broken to me. But obviously, those who've been putting stop losses are out. That's the difference, okay? So I hope you understand that. At some point, I will tell you things that I do that you must not do, okay? Simply because you and I are different persons. You're not me, and you shouldn't be copying me. This is not what I'm doing, those podcasts. I'm not making them for you to copy me blindly. I'm just doing this for you to get into a professional trader's mind, see how I see the market, how I manage the risk, and try to teach you what the shaded grays are and how when you start, you're going to see things at black and white, high contrast, and then you're going to get deeper into assessing the details. And I don't want to hide those details to you. I want to get fully transparent and show you how I trade, even though it's highly complicated to those who will start trading. All right? Anyway, that being said, I still have a few things to say before leaving you guys out there. So 2019 program is going to be a lot more focused on the English content right now. I've been taking very good care of the French users in 2018. 2019 is going to be switching to you guys, so I'm going to provide a lot more English content. But first, I need to clear a few steps. So I'm going to ask you guys for a couple things. First, I want that those who are in the Discord and have suggestions of updates for the indicators, features they would like to be either changed or eventually added, to get into the strategy question topic into Discord and talk through with the moderators and other users to make some propositions. And I'll see, and I'll ask the moderators to gather them all and kind of making a summary to me. What are the major improvements the users are asking for? What are things the user doesn't want in the final versions of the indicators? And then I'll just go ahead. I'll make the final release of the indicator. Afterwards, updates will just be tiny modifications on the algorithms, but the overall thing will remain the same. I mean, we're not changing the displays. It's going to be like that for years, all right? But we need to make sure it's fitting everyone's need, or at least the majority's needs. Because if I have to add some major features, I want to do this before updating the PDF, updating the videos and things like that. I want to get rid of updating of major updates from indicators just to put myself into the next step, which is PDF manual rewriting, then re-recording the YouTube videos for educational content, and then I'll get into making the live room sessions again, in which we're going to talk psychology, educational content. We're going to do that each week. You're going to have each month a test, a multiple choice question test, and I remind you that all those of you who will get 10 out of 10, probably going to be 10 questions, and those who get a 10 out of 10 will have a free month. I basically refund you the entire month. And you can have free indicators if month after month you're just filling the test with a 10 out of 10. You do this, means you get the strategy, you get how it works, you're going to have free indicators. It's simple as that. I had to do this some way. I was thinking about a decent way to do this, and as I said, I think that's the best way I could have come up with. Those who get the point of what I'm trying to teach out to you will have free tools. Those who don't, who are still learning, you don't pity yourself, you're just learning, so that's normal. You don't get a 10 out of 10. It's just that whenever you get through this and get a 10 out of 10, then free tools, simple as that. And as long as you put it through getting the 10 out of 10, you're not going to pay anything, all right? I think that's the most fair way I could have done that, rewarding those who work the best. Simple as that. Doesn't mean that that those who don't get a 10 out of 10 are not good. It just means there are ways to improve, and you're going to move yourself into improving yourselves, and that's how it's going to be in 2019. So anyway, let's sum up informations. Trade really cautious right now in the Forex because we have volatility, and that suggests until we get until we manage to pull through that volatility, high danger out there, so don't be too aggressive in Forex. It's not the timing to do that. Second thing, don't forget to hit the strategy question topic into Discord and talk with the moderators and other users about what features you want to be added, modified, anything like that. I'm going to gather those informations, pull through, push the final updates, and then move on with the educational content, both through PDF and new videos, and updating the website. And then throughout the years, I'm going to move out to other platforms, so it's going to be ported to other platforms, and that should be more than enough of a plan if I can fill this until 2019 ends up. All right, so and once again, and I'll finish with that. That's funny thing because I just received a YouTube email right on the 1st of January, to be really precise, that we've been crossing the 10,000 followers in YouTube. So thank you guys a lot for this. I don't really care about the numbers generally, but 10,000 is kind of a big number, kind of a step that we've been crossing. And I still have a very close look at the viewing times, which are really standing regularly. So this is what I like. You guys are coming day after day. It's not just people getting in, subscribing, and getting out a few days afterwards. All right, it's people. Some people get out, but others get in, and the statistics remain kind of slowly bullish. It's a slow bullish trend, kind of trend I like. All right, so thank you guys means the content has quality and value to you, and that's what I tried to get to. So 2019, obviously I want to develop the English section because yes, and I'm aware of that. I've been way more present active with the French users recently, and I want to balance this throughout 2019. So anyway, bye guys, hope you had nice holidays. It is time to get back at work, but do it slowly as the market is really dangerous right now, and it is as well for me. So if it is to me, it's going to be even harder for you to figure out what the hell's happening. So facing that uncertainty, lower the leverages, remain speculative, don't take too much risks, and just wait for clear opportunities to trade. Bye guys, and see you tomorrow.